the hell? Lillian is hiding her gray hairs.
Mm-hmm.
Mm.
Plenty of those since COVID.
Yes, indeed. I'm not hiding anything. My wife said it. Have you thought about dying? I'm like, only when I drop dead. I'm not dying. Okay? No way. These are my scars.
Mm-hmm.
For sure. For sure. I think somebody's not going to be with us today. Is it Andrea? I believe it's Andrea because she says she has to invigilate
Oh, okay.
an examination somewhere. So just giving Angela a few moments to roll in. I think it's Andrea. Or is it Angela? One of them will not be joining us today. Did you guys get your exam results?
Yes.
Yeah, I did. Yeah.
Immediate feedback?
I haven't read through it, but
Okay, that's okay. You don't necessarily have to do that right away.
mm-hmm.
You get a few moments between now and next week's class. Just go ahead and have a look at it. If you have any questions or issues, or you see, usually if you get a question incorrect, I don't put an X. I just put a little question mark.
Okay.
Okay.
And those that have a little tick next to it, they are the correct answers that I was looking for. Now, if you notice that there are some answers that you feel are correct, even though you see a question mark, don't panic. Just make a note of it. So, I think this is correct. And here is in the notes it says, and blah blah
Okay.
blah. And once we agree, I'll be happy to give extra credit for anything I may put a question mark to, because I'm looking to give credit. That's so.
Okay.
Okay.
If you got over 50, you're on your way. If you got over 60, you're trotting. If you got 70 or more, you're really in the race. Keep on trucking. Okay.
I have a question with the next exam. Is it going to be based on the previous exam and then the notes going after that, or is it just all the notes again? I've
No,
been out of school almost 40 years, so I gotta ask.
that's a good question. It is not going to be cumulative. It will only be based on the notes after exam number one.
Okay, so only after. Okay.
Exactly.
Okay.
We
Great.
don't have to go back over all that stuff again
Okay.
and lose your mind trying to recoup all that stuff again. No.
Okay, yeah, because I tell them I have developed ADHD over.
That's okay. Over the last few decades. That's okay. Dante, my son, already has that. He has a serious issue with focusing on stuff for more than 20 minutes.
Mhm.
He's always had that issue in school. He's a dad, why do I have to study all this stuff? Why can't they just give us the important points and let me learn that?
Mhm.
No, it doesn't work that way. So he has this thing where he has a version of AD.
Mm. I
In
think is I have too much going on, so my mind is
Oh,
here, there, and everywhere.
definitely. He has it too, but not the same as yours. His thing is the youngsters thing where he's thinking about girls and music,
Mhm.
graphic arts and that crap that he likes and video.
Yeah.
So that's those are his diversions.
Mhm.
So when it's time to study, man, after about 20 minutes, he starts doing all kinds of crazy stuff. Just keep him away from the textbook. So yeah, quite understandable. And as you get a little older, you start developing natural AD anyway, because you don't want to be bothered with that
Mhm.
to begin with. In addition to anything else that might be going on, for sure, for sure, for sure. Did you guys get to keep the examination?
I think it's saved in the email, I think.
Email. Yeah.
It's in your email somewhere.
Yes, I could probably I should be able to pull it up.
Okay, because what I'm gonna do is hoping that. Well, you know what? Maybe I should wait until everybody's available, so I don't have to do it twice.
Okay.
Persons might have some issues and questions along the way. So why don't we do this? Why don't we you take some time, everybody takes the opportunity to go over that stuff, see what is what, and then when we meet on Thursday, I'll take a few minutes at the beginning to go over the answers I was looking for,
Okay.
and then we can have questions and chit chats. And if I need to give anybody any extra credit, I'm willing, ready, and waiting to do that. Okay. So we'll do that exercise on Thursday.
Okay.
All right. So while we wait for Angela or Andrea, I'm not sure which one is won't be joining us. Let's just open up with our usual video kickback. Uh, Again, the videos are designed to give you some visual feedback, introduce you to other people who are doing this stuff in the world, a few ideas and concepts that they might throw in that will gel to some extent with the notes that we. So let's just do that first. Okay. Now I eventually found a lot of the persons, as you know, who are doing these videos. They're from all over the world, Europe, India. I haven't seen any Africans yet. Africans must be don't like accounting and auditing.
Mhm.
Indians love accounting and auditing. Europeans to an extent. So you'll find a lot of these done by Indians and people from that part of the world. So I found this young lady who I was actually able to understand a little bit better. So I said, you know what? Let me go with her. The first two that I looked at were some guys sound like they were trying to speak English and mixing it up with their native language and whatever else they were mixing it up with.
Mhm.
All right, so let's see. Share screen, share. Can you see that, young?
Yeah.
Yes, it's coming up.
Wonderful. Okay, so we'll start with her, and then when she's done, we'll go into our lecture, and then we go from there. As you can see, she's a traditional Indian chick with a
Mhm.
wrap.
Mhm.
Yeah. So I don't know. I don't know if they let her leave home to do this. She must be maybe in her own room, because you know
Mhm.
messing around Indian chicks. But you can't go here without Ravi and all that.
Mhm.
Okay, there we go.
Today I will be talking about verification of assets and liabilities. This is your fourth chapter in auditing. Previous chapter was vouching, where we
Which
learned
we did last week.
how the various transactions entered in the books of accounts are vouched. And we also came to know that vouching is the essence of auditing because it helps us to know whether all the entries made in the books of accounts are supported by an evidence called voucher, which helps us to also know the genuinity and the accuracy of the entries made in the books of accounts. All this they do to help them to achieve the objective. Help them means help the auditors to achieve the objective of account auditing, that is to find out whether the books of accounts are true and fair. They also have to check whether the financial statements are true and fair. So when we are talking about financial statements, it includes profit and loss account and balance sheet too. So when we are talking about balance sheet, students, you have got assets and liabilities there. And just with the process of vouching, we cannot know the genuinity and the possession value or the exact position of the assets on the date of balance sheet. That is because suppose you have made purchases during the year, you can check it through vouching. But suppose it has been depleted, it has been sold, then, or suppose it has been mortgaged, we will not get an idea through vouching. So to know whether the assets shown in the balance sheet on the date of the balance sheet is true and fair, the auditors carry out a process called as verification of assets. According to Spicer and Pegler, the verification of assets implies an inquiry into the value, ownership and title, existence and possession, and presence of any charge on an asset. See, this definition can be split into 4 points. If these 4 points are checked with regarding to an asset or a liability, then the verification process is complete, we tell. Okay.
Our English is pretty good, yes?
Mm-hmm.
You guys,
Yes.
you guys
Yes.
are having any problems understanding, all right?
No.
Wonderful, wonderful. Okay.
So I will just tell you what are those 4 important points. The auditor has to check whenever he does verification of an asset. Firstly, he has to see, students, whether the asset is in the name of the company. That is, whether the owner of that asset, the ownership titles lie in the hands of the company or lies in the name of the company. This is the first one he has to check. All the assets should be in the name of the company. The ownership title should be in the name of the company. Secondly, he should see whether that asset is physically possessed by the company, whether it is in the possession of the company on the date of balance sheet. That he has to check secondly. Thirdly,
For example, Lillian, or even Camille, you know you work in a firm presently where there are many computers, yes?
Yes.
Yeah.
And those computers probably cost on average maybe $2,000 each, maybe in some cases less or more, somewhere in
Mm-hmm.
that range. So if you multiply using that average by the number of computers throughout the entire company that you work for, you might discover that that is a significant amount of money for those assets. The problem with computers, sometimes computers are like toilet paper. People try to figure out a way to run off with one without being caught. And sometimes many people are successful in taking assets away from the firm. And sometimes the firm will never know that those assets are missing unless they are doing exactly what we are talking about today. And that is called verification. Okay? This is why, for example, and internal auditors do their work. Part of the work of internal audit and external, to a great extent internal, is the verification of asset liabilities. Make sure that they actually exist. Because, for example, the internal audit might do a verification check last year and find out that there should be 300 computers in the company. This year, they expected to do an internal check again. They might discover that the 300 computers are not there anymore. It's only 257. And so now the question is, what happened to the rest, the other 43?
Mm-hmm.
And that is a very important question. And that concept of verification can be extended across the board to most assets in the company and indeed liabilities. So this issue of verification, and later on we'll see evaluation, especially verification first, is absolutely crucial to make sure that what is supposed to be there is there, and that there are no surprises. Companies discover surprises all the time whenever they fail to verify. Okay?
he has to check whether that asset is free of any charge. What do we mean by free of any charge? That means whether that asset has not been kept as mortgage for the loans taken by the company. If it has not been kept as mortgage, then we tell there is no any charge on that asset.
Does everybody know what mortgage is?
What is it?
She used the word mortgage. What does that mean?
Mm-hmm.
Ever heard that word before?
Mm-mm.
I hope not, because that's just a broken English version of mortgage, okay?
Oh,
So,
I wondered if that's what it was, but
yeah, absolutely speak up on it. She's trying to say mortgage. Okay? So for us, for now, mortgage is fine. We know what it is.
If it has been kept for mortgage, then we tell there's a charge on that asset. This is the third point. He has to verify. Fourthly, he has to check whether the value displayed in the balance sheet is accurate. How he will do this is he will personally do the calculations taking into consideration the various method followed by the company with regarding to its calculation and find out whether the value displayed in the balance sheet is accurate. So fourthly, he has to do the valuation too. And fifthly, students, he has to see whether it is properly stated in the balance sheet. We know when we talk about balance sheet, company's balance sheet, it has got its own prescribed format with various schedules that has to be displayed in it. So according to the prescribed format, these assets should take its place in the balance sheet. So whether it is actually done by the accountant or not, it will be checked by the auditor. So once all these aspects are verified, students, then we tell the verification process is complete. So once it is complete, then we will come to know the genuineness of the assets that has been displayed in the balance sheet, which will help the auditor to state whether the financial statements are true and fair. Okay.
The reason for this, obviously, is that many firms do not disclose all the information on balance sheets sometimes. Sometimes firms deliberately leave off certain assets for one reason or another, or they add additional assets in the firm to make the balance sheet look stronger, assets which actually do not exist. And as we'll see very shortly, a lot of times the evaluation on these assets are far from accurate, which means that many balance sheets around the world, including the Bahamas, not necessarily accurately reflect the position of the firm. However, once that firm is audited, it is expected that the auditor will check these elements of the balance sheet, the assets, the liabilities, to make sure that what is stated on those balance sheets and income statements are in fact true and correct. Very important concept for the internal and external audit process.
See, I was also talking about verification and valuation of assets. So valuation is a part of verification, but when the auditor does valuation of assets, students, he has to value different classes of assets, and different classes of assets are valued differently. Okay, just let us know the main points regarding valuation and then continue with our concept. I was talking about various classes of assets. First class of asset is fixed asset. So how is fixed asset valued? It is cost price minus the depreciation till date. Okay, so this is the way fixed asset is valued. Next, you have got current assets. Current assets, how is it valued? It will be cost price or market price, whichever is less. Thirdly, wasting assets. What do we mean by wasting asset? Usually we depleting assets or mines or quarries, we call it as wasting assets. How is it valued? The value of the quarry minus the extracted value from the mines or quarries. So that will be the value of the wasting asset. Then you have got intangible assets. Intangible assets, how is it valued, students? We have to take the cost price minus the written down value. Then the fifth class of asset, you have got fictitious assets. How is fictitious assets valued? Again, it is the value minus the written down value. So this way, different classes of assets are to be valued, and the auditor will check whether the accountant has valued so. Okay. So now, for us to get a correct image or correct idea about how the verification and valuation is done in the companies, they have given us few examples of assets with the help of which we will get a clear picture what and all documents and what is the procedure actually followed by the auditors. So the first asset which they have given to us is called as land and building. So when we talk about land and building, There are two types of land and building they have covered here. That is freehold land and building and leasehold land and building. Freehold land and building, you suppose it has been displayed in the balance sheet, freehold land and building 5 lakh rupees, then that has to be verified and valued by the auditor. Okay. So now, firstly, he will check whether there are any freehold land and building purchased during the year. If there is anything purchased during the year, then he will ask for the purchase agreement or the sale deed. And usually,
Just to let you know, freehold land and buildings only mean land and buildings that are purchased by the company you work for. Okay? So if your firm buys land somewhere and or a building somewhere, those are referred to freehold building assets.
students, these fixed assets and all are bought through brokers or through auction. So then he will also ask for broker's sold note if it is through broker, or if it is through auction, he will ask for auctioneer's note. So there, the date of purchase, the amount of purchase, the type of asset that you have purchased, the brokerage or the auctioneer's fees you have to pay, all that will be mentioned. So that will show the actual, it will show whether actually there was a sale, sorry, not a sale, purchase done in the organization or not. Okay.
What usually happens is when the auditor comes in the previous year, it looks at the land and buildings in this example. Okay, the value is stated at 1.5 million. When they come in to do the audit in the current year, they'll go back to land and building account. And if they see that it has changed from 1.5 million to 4.7 million, clearly it shows that there was an additional purchase during the year. Once the auditor sees that change, that will prompt the auditor now to get all the information that is necessary to verify the purchase of the additional building and land for the current year. And this is how the actual verification and valuation is done with each asset. Kind of give you a clearer perspective on the real day-to-day vouching verification process. Because again, we talk a lot about the concepts, and we've been tested on many of those concepts. Now we're just kind of seeing the nitty-gritty of the process in terms of verifying and eventually valuing these various assets and liabilities. These principles apply to both the internal and the external processes that will be applied by both groups.
So he will ask for all these documents to know the genuineness of the purchase. And then he will also see whether this asset purchased has been registered in the name of the company under Indian Registration Act. So a registration copy also he will ask and verify and see whether the name of whether the asset is in the name of the company, whether it's registered in the name of the company. So title and ownership he is satisfied. But one more point you have to keep in mind here, students. When he has to go for registration, he has to pay registration fees. He has to pay legal charges, filing fees. And when it is bought through broker, he has to pay brokerage. When he has to buy through auction, auctioneer's fees, all this he has to pay. So any expenses that the company incurs in acquisition of the asset can be capitalized or has to be capitalized. Okay, suppose 1 lakh worth of asset he is purchasing and all these expenses together come around 10,000. So what is the cost of the asset that he has purchased? It will become 1,10,000 rupees. So whether it has been followed in the company or not during that year, regarding that purchase of land and building, will be verified by the auditor. Okay, and land alone is an asset which will be appreciated and will not be usually depreciated. Okay, so all these aspects he will see if there is a current year purchase. Suppose this land and building is pre-existing existing, then he will ask for the documents, which the title documents or the ownership documents, which proves that the company, the land and building is in the name of the company. Registration copy, sale date, he will ask for that, and he will see whether it is all done according to the procedure and whether it is registered in the name of the company or not. He will just check the title deeds. Yes, he is satisfied that title and ownership is in the name of the company. Now he will next see whether it is physically possessed by the company.
Question for Camille. Camille, do you own a vehicle of your own yet?
Yes, sir.
Did you buy it with your own money or somebody else's money?
Somebody else's money?
Okay, that's okay. Is the vehicle registered in your name or not?
No, my dad bought it, so it is in his name.
Okay, so you are the happy driver of that vehicle at the moment.
Yes, sir.
Yeah, and maybe one day if you're a really good girl to your daddy, he might even turn the registration over and put it in your name.
Yeah,
But
he's supposed to, but the process so long, so I just wasn't really interested.
I was hoping you would say that,
Yeah.
because that is what happens to a lot of people when it's time to convert title deeds, even in the firm. A lot of times, for one reason or another, there's procrastination, and then something negative happens, and all of a sudden, everybody's trying to find out who is the legal owner. And then you discover, oh, the paperwork was never done, it was never legally turned over, and because of this verification process, the auditors discover that title does not sit with the firm, but rather sits with the original seller, who the firm has already paid but never got clear title. You follow?
Yes, sir.
So I'm happy you said that, because it does highlight the importance of verifying to make sure that all the proper things are in place. Now, if you're like my son and it doesn't matter right now, like, oh, whatever, I just want to drive the hell out of the vehicle, then I would say no need to rush to convert it to your name. However, if you are interested in being declared the owner of that vehicle for whatever reason, sometime tomorrow morning at 9:15, you'll find yourself to the relevant place and have it turned over into your name. Because until
Yeah.
then, you are not the legal owner of the vehicle. If something happens to your dad, even though you're the driver, your sister or somebody else from down in Baintown or maybe Abaco, Lillian, show up and say, this is my car, or something like that. And then you're like, no, 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 no. Daddy bought this for me. I was just driving and I'm trying to convert it to my name. You follow?
Yes.
And all of a sudden somebody else takes possession and you're catching the jitney. And then you say, well, you know it's mine. And they say, yeah, I know, but it was never in your name, so it's now mine. And they say, how
Yeah.
can you do this? You might
And
say,
even if you go to license and insure it, you wouldn't get it done. You
absolutely.
have problems.
And so now you're crying, oh, could my sister or brother do this to me? They thought they loved me. They do, except when it comes to stuff. That's just a word to the wise.
Yes, sir.
Okay?
I'm going to do it.
But I know what you mean. Sorry?
I said I'm going to do it soon.
I know.
I've been saying that for a while, but
I,
for true, I'm going to do it.
that's what I'm hoping. That's why I interrupted this chick from India to say that to you. Because I know you've been procrastinating for a while. And I'm saying, when it comes to title and ownership, do not procrastinate.
Oh yeah.
Okay? One of these days you will buy a house. You don't want to procrastinate. You
Oh
want
no, the house is going to be in my name. Definitely.
okay, so you understand that part of the thing.
Yes.
Okay, very good. Just thought I'd throw that out, because sometimes when we're young, we procrastinate. How about that? Okay, great. Let's
Yes,
go.
there are also field visits which are done by the auditors. So they will physically go to that spot where the land and building is there, and they will go and verify and see whether it actually exists and whether it is in the possession of the company also. So physical field visits are done, and physical verification has been done to know whether it actually exists and it is in the possession of the company.
And again, this especially for, doesn't matter whether the firm is small, medium, or large. The point is, it is crucial. For example, if the Auditors are looking at land and buildings valued at $10 million, for example. Even if it's 10,000, you still have to verify it. But 10 million seems to like want to spook you into making sure that that bloody thing exists. So you take a chopper or a plane or a jet or wherever you need to go, a limo, bicycle, anything you need to go on to make sure that that property actually exists, correct?
Mhm.
Yes.
It'd be like hell to say, I'm going to take management's word that this $10 million property exists, and then some time later when there's a dispute, it is discovered by the court of law or otherwise that it's on the balance sheet, but it never existed. Wouldn't that be tragic?
Mhm.
But companies do that all too often. They declare assets and liabilities that do not exist. And some law auditors, internal and external, get caught. For example, the internal auditor might get shut down by management. You don't have to check that. We know it's there. See, that means leave that the hell alone.
Mhm.
And they even tried to dissuade external auditors by saying, it's okay, John. We made sure that it's there. We can go anytime and inspect it. Let's just have lunch first, and then we'll worry about that later. Maybe at the end of the audit. See? And by the end of the audit, they've already talked about increasing the audit fees and giving them some extra for being great auditors, all of which they should not accept because that falls into our next discussion later about ethical and professional practices. See? Very interesting. So it's all interconnected, even though at the moment we're just talking about something what seems to be as simple as verifying the existence of assets and liabilities. But that is a huge responsibility of any living auditor.
The second point is also that. Thirdly, they want to know whether it is free of any charge. So they will ask the accountant if this property has been pledged or mortgaged for the loans of the company. If it is so, if it has been pledged, then he will ask for certificate of mortgagee. So from the company becomes the mortgager and the bank where he has mortgaged becomes the mortgagee. So he will get a certificate from the banker specifying the loan for which this asset has been kept as mortgage. So that certificate of mortgagee will be asked by the auditor to know exactly whether it is free of any charge or if there is any charge, to what amount this charge has been claimed by the company.
Why do you guys think it's important for the auditor to determine whether or not there are any charges against the assets? Why is that important? Whether or not any bank or other lending company has any claim against the asset. Why do you think that's important?
To know if, um, like to know if the asset, if the company they're auditing is like really the owner, I guess, of the asset, or if
No,
there's someone else out there that could come and claim the asset as their own.
absolutely. Problem number one, are you the true owner? Problem number two, does any bank have any liens against that property? Because remember, once you owe the bank, which is a liability, if you do not pay the bank, what happens to you, to that property?
They take it.
They
Okay.
take it. It's as simple as that. If you have a car loan, you don't pay the car note, what do you think they can do with the car?
Take it.
Take. It's as simple as that. It's not complicated. So when the auditor comes in, internal or external, to do an audit, it is very important to find out what loans are outstanding against what assets, and whether or not those loans are up to date. Because if those loans are not up to date for some reason, that is a big problem for the management of the firm. Because now the auditors need to know why they're in arrears. And to what extent will these assets be in jeopardy because of these arrears? Because remember, after 3 months in arrears, bankers start moving in on you, looking to foreclose. Okay? They'll go beyond 3 months if you strip naked and plead and beg before God, maybe. Or if you know somebody, or if you pay somebody, or if you politic something. But the normal customer like us, who don't have all those things going for us, after 3 months, they start moving in. And so auditors need to make sure that there are no such claims against the firm that could potentially hurt certain assets in the firm. not only the assets, but also the future borrowing ability of the firm. Because remember, if the firm stops making payments on its loans to the auditor, that sends another message to the shareholders that is a cause for concern. Because now the shareholders want to know what? Why aren't you paying the loans on time? Then we discover eventually that the company has a what? Cash flow problem. And now that's to find ways to generate more income or cut expenses. What do you think they're going to do first? Generate more income or cut expenses?
Cut expense.
And expenses
What do you think they're going to start with?
with the staff.
Why not? Always.
It's the
Every
highest.
single time. Every single time. Okay? We have a similar situation, not directly related to auditing, but it does have an implication. For example, you may have heard that Bahamas is not opening until October, correct?
Yeah.
Yeah.
Which is around headed towards winter season, which is the best season for hoteliers. The question might come up then, why is it that they're waiting until all the way down there? Well, obviously, the summer months are slow for hotels, so they hire people now. They're going to have to pay them what? A whole lot of money
Mhm.
during the summer, which is slow for them. So now they're using the pandemic to say, we're getting ready for winter. We're
Mhm.
not going to open until October, and therefore, you employees who are waiting until October find a way to stay alive until we call you. And remember, when October rolls around, are all of them guaranteed to be called?
No,
No.
So,
they're gonna weed out.
yes, Lillian said it, the old weed out thing. Who don't like Tingham and who don't like whoever
Mhm.
and who wants to bring in their own new people and their new associations and affiliates and auntie, sister, Tingham, them, whatever, all hell's gonna be breaking loose between now and October. That's the point. And so I just say that this, even though that's not directly related to auditing, to show you why verification is so important and how it can lead you to all kinds of interesting things. Which leads me to my other point on verification about the hotels that is not directly related to our discussion on accounting, and that is, since they've decided to open in October, suppose somebody from the government or elsewhere decided that they'd do a verification check to see why they made that decision. Wouldn't the answers to that be interesting?
Mhm.
Hmm. Not the same accounting verification, but verification by any name is still what? Verification.
Mhm.
All right.
So the third point is also done by him, verified by him. Fourth is the valuation part. Valuation. Valuation of fixed asset is cost price minus the depreciation. Okay, the depreciation has to be deducted and the amount has to be displayed in the balance sheet. So every year he will just go through whether the same method of depreciation is followed, students. If they have changed the method of depreciation during the year or previous year comparatively, then it will be he will ask for explanation and it has to be explained rightly. Okay, so he will uh, do the calculations on his own and see whether the amount displayed in the balance sheet is the same. So,
Why is the auditor checking the depreciation calculations? Is he suggesting that the staff cannot add, subtract, multiply, or divide? Why is the auditor checking himself?
In case that they're depreciating at a higher, I guess, value.
That's one reason. But of course, the other reason is even though the auditor has to rely on certain information from management and staff, they can't believe everything they say, can they?
Yeah, they still
No.
have to verify it.
They still have to check it, absolutely. So Camille, since you're young, so I'll pick on you. If you're dating somebody and he says, I don't have another girl, will you just accept his word?
I mean,
I know I must ask the hard questions. That's what auditing is about, the hard
yeah,
questions.
hard question.
Would you just take his word?
Um, yeah, yeah, yeah. You don't want to just
At first, Camille. At first,
assume.
until you see signs.
Right. In the
Yeah,
beginning, you would take that word and tell you, like until you see signs, maybe there's someone else, but you don't want to go into it not trusting the person.
absolutely. And that's interesting because that's how we should do it in our relationships. We should take their word until they give us reason to believe otherwise. The auditor operates the other way around. They don't take your word until they prove otherwise. Do you follow?
Mhm.
Yeah.
So it's kind of like that. So it's okay for us in our relationships to do that. We do want to take the person's word. We do want to trust them until they tell us otherwise. On the auditing side, though, you have to change your cap around the other way. You have to say, I'm not taking anybody's word. I have to check myself first, and then if I discover they're right, then I will confirm with them you are correct. But until you confirm that, you have to act as if they're wrong. And to some extent, remember that audit skepticism we talked about? To some extent, you have to be skeptical enough to assume that not only might you be wrong, but you might be lying. And if your skepticism is really intense, like your spidey sense is really intense as an auditor, you might even go as far as to think, well, this lie might even be fraud. But of course, you don't walk into the building and say, any fraud in here? Would you do that?
No.
No, of course not. But you must be sure that as you begin your audit, you have to start from a position of skepticism. Assume things might not be right until you prove that they are in order. That's the deal. Okay.
And the last part, whether it is stated properly, it should be stated in the balance sheet under which heading? Under fixed assets heading. So he will see whether it is stated under fixed assets heading and he is satisfied. So all the 4 to 5 aspects of verification he has completed, and he ticks that land and building asset, telling that signifying that the verification of this asset is complete or is done. Next, he talks about leasehold land and building. Leasehold land and building. Here, what do you mean by leasehold land and building? When the asset has been purchased for lease, the lease will be for a fixed amount. And to know about this, to know about the authenticity or uh, ownership of leasehold property, he will ask for lease agreement. In lease agreement, you will have details regarding the amount of lease, the period of lease. All these details will be there for you. So he will check the lease deed, and then he will see whether the lease deed is registered in the name of the company for that period of year, that period of time, and then he will see whether this lease landhold property is free of any mortgage or is there any mortgage with regarding to this property. And then when he has to value, he will spread this lease amount for that number of years, and he will see that every year a fixed portion has to be shown as depreciation till the total completed period. So this way he will check the leasehold land and building. So the next asset which they have covered here is, students, plant and machinery. So plant and machinery is also another fixed asset. Here also you have to check all those 4 to 5 points with regarding to verification. Firstly, you have to see regarding the title and ownership of plant and machinery. So here you can tell, firstly you have to see if there is any fresh plant and machinery purchased during the year. So if it is purchased during the year, students, you have to ask for purchase sale deed. Here also, since it's a fixed asset.
Let me ask you guys something other than cash. What do you think is the next biggest asset at Disney World?
Pardon me?
Other than cash, what do you think is the biggest asset at Disney World?
The rides.
Right?
Of course, those buildings and rides and stuff that you go on. Imagine how much was paid to build them, correct?
Yeah.
Yeah.
So imagine being an external auditor of Disney World and having to sit down and verify those kinds of assets.
Mhm.
Okay, they shouldn't be difficult to verify once you have your program in place and you know what you're setting out to do, because they can't really move most of them, correct?
Right.
But they
Right.
could convert them into other things. So even though something may not be moved, something might be converted the following year. And again, this is where audit judgment comes in, because your textbook may not say, here specifically the steps of auditing Disney World. You have to create your steps according to the organization you work for.
Mhm.
Okay? That's really the point. All right.
Usually they purchase it through a broker or through auction. So you should ask for broker's sold note or auctioneer's note. There you will get complete details regarding the model of plant and machinery that you are purchasing, the purchaser from whom you are purchasing, the amount of purchase, the date of purchase, and then the brokerage you are supposed to pay, the auctioneer's fees you are supposed to pay. All the details regarding that current purchase you will get from that document. So you will take that document for proof to see whether the same amount has been shown even in your books of records. Okay. So whenever I told you in the previous session also, whenever you make a purchase during the year, you have to also see that is there any other expenses you are incurring in acquisition of this asset? If so, you have to capitalize those expenses. For
And anybody ever heard the word capitalized before?
Yeah.
Yeah.
Yeah. Capitalize is just a fancy word for adding additional costs onto the original cost. For example, if you buy a car in Florida for $10,000, by the time it gets to Nassau, would it be 10,000?
No.
No,
No.
you have to add to that. What other costs would you have to add to the invoice price from Florida?
The freight.
Judy, freight.
Freight and duty and
And
anything else, insurance,
yeah.
and any other costs that you may have to pay to get it here.
All these levies and everything that they have in place.
Every single thing. You have to
Mhm.
add all of them up. And let's say duty is 50%. So that means if your car is $10,000, duty is 50%. Suddenly your car is no longer 10,000. It's now what?
More than 15 because you got to add your duty on all the shipping and stuff.
Absolutely. And so all those things you have to add is what we mean by capitalized. Okay. So by the time your car gets to Nassau, even though you pay 10,000 in the US, the cost of your car could easily be $20,000 or close. Okay. And that's what capitalization is all about in terms of what she's referring to. Whenever a company buys an asset, whatever it has to pay in order to get the asset set up and running, it has to be added to the cost of the asset. Okay. All right.
example, if it is a plant and machinery, suppose
By
it
the way, plant and missionary is not missionary. Do we know what that word is?
Machinery.
Yes. How did you figure that?
I remember doing that plant machinery in my accounts courses.
Aha. It's amazing how when you are introduced to stuff, no matter how long it is, after a while, things kick in like riding a bicycle, isn't it?
Mhm.
Yes.
That's the beauty of education. Even if you don't think you needed it. Oh, I'm too old, I'm too broke, I'm too tired, I'm too miserable, I don't need it. You'd be surprised to know what you need and when it'll come in handy. All of a sudden, Camille remembers that that cannot be missionary. The only reason she can remember that is because she did accounting before, and that should be machinery.
Mhm.
Way to go.
you are importing it, students, then you are supposed to pay import duty, you are supposed to pay customs duty, clearing charges, dock charges, and all that.
Does anybody know why she's referring to that same thing we just talked about in our country? Customs duty, dock duty, freight, and all that stuff. Do you know why she's using those expressions? Well,
Why?
I don't know if you follow.
remember, India is a Commonwealth country like the Bahamas.
Okay.
Oh,
And since India was colonized by England, as we were colonized by England, they used the same program that we use. Customs officers wear the same uniform as the British back in the UK. Customs duties and all that stuff are charged and are taxed basically the same way. And so they do the same thing basically in India, where England occupied that country for many, many years. Okay. So
Okay.
India, New Zealand, Canada, the Bahamas, Barbados, and other countries of that nature, all Commonwealth countries who were colonized by England, the English speaking country. Interesting, isn't it?
Yes.
Yeah.
To
Okay, so you're
acquire
wondering.
that asset. So all that you have to capitalize, and then you will have carriage inwards that also you can capitalize, and then you will also have installation expenses that also you should capitalize. And if it is huge plant and machinery, students, they also will register. So registration fees, legal expenses, all that you have to capitalize. Okay. So whether all this has been done in the company and rightly it is recorded in the books of accounts or not, it will be checked by the auditor for current year's purchase. Okay. But there may also be various plant and machines which are pre-existing. So to check with regarding to those plant and machineries, the auditor will ask for schedule of plant and machinery. The schedule of plant and machinery is nothing but the list of plant and machineries that are existing in the company. You will have the
So
number.
Lillian, have you seen a list of your company assets yet in your life?
Yeah.
Okay. Have they ever asked you to conduct a verification of those assets?
No, I haven't.
I know. Um,
I
that is
don't think I don't think internal audit has done that either since we've started.
I could believe that. That is a very unique thing in many firms like yours and others, where even though they have internal audit departments, something like that does not often come up as a focus for some reason,
Yeah. I know the external auditors do it every year, but
but not necessarily the internal
no,
audit.
I'm not aware of the internal auditor doing the asset side of it.
Indeed, indeed. And that's certainly one of the things should be on their hit list. But
Hmm.
problem with internal audit is they are appointed by the management. And sometimes the management doesn't like that kind of scrutiny. When I say the management, I mean the organization in
Yeah.
general. And the reason why oftentimes many firms prefer external auditors to do it, because many external auditors do not do it completely. They just like skim over it,
Right.
which is a whole different ball game from verifying each and every asset. Mm, okay.
Number of the plant and machinery, you will have the model in that, the date of purchase, the amount of purchase, the life of that asset, and also the depreciation that the method of depreciation that has been followed with regarding to that asset. All these details will be mentioned in schedule of plant and machinery. So it also has to be certified by a authorized official of the company or an authorized engineer of the company with regarding to that values mentioned in the schedule of plant and machinery. So he will take that plant and machinery schedule and then he will cross check with plant and you will have a ledger that is being maintained in the company with regarding to plant register. There will be a register called plant register. So he will compare all the plant and machinery details with plant and register. It should be one and the same. And then he will keep this plant and machinery schedule and do the further verification with regarding to plant and machinery. If suppose there are 10 models in the company, he will ask for the documents of those plant and machineries and he will check whether all that are in the name of the company. Title and ownership should be in the name of the company. He will check that. And next he will see if the any of these assets have been mortgaged for loans in the company? If it,
Now, folks, let me just say this for the record. First of all, she spent a whole lot of time talking about these different types of fixed assets. The first one being land and buildings. Now she's spending a whole lot of time talking about the verification and evaluation of the leasehold improvements, um, leases that the company might have, and certainly the plant and equipment of the company. This it has been pretty exhaustive so far, and you'd think this is a whole bunch of work. And maybe you wonder, well, it's no wonder auditors don't check the whole thing in detail because it seems to sound like it'll take forever to do. And the answer to that is not necessarily. It may sound exhaustive, but it does not take whatever, forever to do, and it's a very crucial exercise. Because remember, this company that she's talking about is probably multi-million or billion-dollar companies. Okay, so these assets that we're talking about verifying, we're talking about tens of millions of dollars in assets, maybe billions in some cases. Do you follow? So this is very serious business. And you can easily see why, if management is up to no good, they may want the auditors to bypass this verification process. And if management is up to no good, why they want to internal audit department to not even bring it up for discussion. Mm, okay.
we will ask for encumbrance certificate or title of mortgagee, certificate of mortgagee he will ask. It has to be produced by the auditor to know whether the asset is free of charge or not. And next, what he has to see, he has to physically go to the factory premises and see whether all the 10 plant and machineries are physically present in the company. Okay, physical verification is also very, very important to know whether physically it is possessed by the company. When he goes for physical possession, suppose he finds only 8 machineries there, students, and then when it is inquired and the auditor accountant replies 2 of their machineries, which is in the name of the company, are in the branch office, then he has to ask the branch manager to certify the same. So he has to get a certificate from the branch manager certifying these 2 model of assets are present, physically present in the branch office of the company.
Question. We all know that BPL, for example, has a bunch of vehicles that it uses, correct?
Mm-hmm.
Do you think that the internal audit department conducts a verification check on every single vehicle in BPL?
They should.
They should, absolutely. They should. Uh, and I sure hope that they do, because if somebody discovers that they're not doing that, then persons in the maintenance side who's responsible for those vehicles could easily take one for themselves, correct?
Correct.
Yeah.
Absolutely. And paint it over, who would be the wiser?
Mm-hmm.
Or they could sell one or two of them and keep the money.
I'm sure it's happened before.
Aha, I absolutely agree with you. Okay. And if somebody was bold enough to actually verify and report, we might be in for a rude awakening. Same
Mhm.
thing ETC and any other company of that nature. Okay. So all of a sudden, we see this whole process becoming so critical, has always been. What about those persons who drive government car? Remember that word, government car?
Mm-hmm.
Yeah.
Yeah. Who's accounting for all the government car them?
Mm-hmm.
See my point?
Yep.
And who's verifying every year that what should be there? And when they get rid of them, who are they getting rid of them to? Who's
Mm-hmm.
disposing of them? Who's sending in a report on every car that is disposed of? Hmm. You don't really hear anything about that.
Yeah.
No. That's a well-kept secret. I haven't even heard the Auditor General report on that yet. Have you?
No.
No. And he is the Auditor General of the Commonwealth. See? Auditor. Auditor.
Mhm.
Mm. Okie dokie. But that's perhaps something from Camille's generation to think about. Is Living and I getting to the point now we've done our fighting? And maybe we're getting to the point where we don't care where the school is kept or? Well,
You're right.
okay.
So physical verification has to be done, and then he has to go for valuation of plant and machinery. Plant and machinery, when he is valuing, he has to see if there are any additions made, it has to be recorded. If there are any sale made, it also has to be recorded. If there is any outdated machineries during the year, which has to be treated as scrap, that also should be recorded. He should see all this. And suppose there is sale, students, then he has to see whenever there is sale, there will be profit or loss made on sale. So this profit and loss amount should be treated as revenue. Apart from profit or loss, the amount that you get, apart from this amount, that sale amount should be treated as capital amount, or loss should be treated as revenue amount. So this bifurcation with regarding capital income and revenue income has been done in the company by the accountant or not should be checked by the auditor.
Absolutely. There should be a procedure in place where whenever you sell an asset of the firm, doesn't matter what the asset is, building, plant, machinery, equipment, computers, doesn't matter, vehicles, trucks, buses, planes, rockets. Do you follow, folks? There should be
Yeah.
an accounting for the sale of each and every single asset. And any money that is received from the sale should go into the bank account of the firm and the transaction properly and sufficiently recorded in the accounting records. Because oftentimes when a company sells an asset, sometimes they make a gain on the asset, or sometimes they may make a loss on the asset. Whatever it is, in addition to the cash, those gains and losses must be recorded in the financial statement. Otherwise, they cannot be regarded as true and fair. So this is some very interesting stuff all of a sudden, not only from an auditing perspective, but for companies in general. And it does make you wonder how many people are actually doing these things. Hopefully they are, but I'm certain that they are oftentimes not.
Okay. This is with regarding to the sale of plant and machinery. And how do they value plant and machinery, students? It will be cost price minus the depreciation. Cost price minus the depreciation. He will calculate on his own. If it is in existence for 5 years depreciation he will minus, this year's depreciation also he will minus, and find out what is the value on the date of balance sheet. With regarding to plant and machinery, that's it. I think all these points, if you cover under plant and machinery, suppose there are any repairs regarding plant and machinery that the company has incurred during the year, students, that also should be treated as revenue expenditure and not capital expenditure. So all these points has to be looked into by the auditor
Auditor.
during verification of plant and machinery. The third asset that they have given is goodwill.
Okay, so we're going to take a break there while she contemplates goodwill. We'll come back to her a little bit later. Um, Let us jump into our audit lecture so that we can get to the material that we want to get. Can you guys see that yet?
Not yet.
Not yet. Okay, share. Okay, very good. Can you see that?
Yeah.
Okay, wonderful, wonderful. What's the name keeps dropping off? Can you see
Yeah,
it?
internet must be
Yeah.
keep going. Yeah, I can
So
see
while she tries to get back on, Lillian, it's me and you, kid. Let's get cracking.
it.
She'll join us when she gets back on. Okay.
Okay.
Verification and valuation of assets and liabilities by the auditor. Okay.
Okay, meaning of verification. Spicer and Pegler have defined verification as it implies an inquiry into the value, ownership and title, existence and possession, and the presence of any charge on the assets. Verification is a process by which an auditor satisfies himself about the existence and accuracy of the assets and liabilities appearing in the balance sheet by inspection of the documentary evidence available.
Sorry, can you
Verification.
see this, the notes? Okay,
Yes.
great. Welcome back.
Okay. Verification means proving the truth of confirmation of the assets and liabilities appearing in the balance sheet. Verification includes verifying: 1. The existence of the assets; 2. Legal ownership and possession of the assets; 3. Ascertaining the assets is free from any charge; and 4. Correct valuation. It is not possible for the auditor to verify each and every asset. It was held in the Kingston Cotton Mills case that it is not part of an auditor's duty to take stock. No one contends that it is. He must rely on other people for the details of stock in trade in
Pick
hand.
up in 1 second, Lillian. I just want to
Okay.
bring to your attention as auditors and potential auditors and just information in general. If we have a court case, it means that from time to time auditors end up where? In court. Which is why, remember our discussion on working papers? I think that was in the exam as well. That
Yeah.
working papers are necessary in case you need to use it as evidence in court. I think most people actually got that right as well, which was good. Because that is a very critical function of working papers. Working papers create evidence and proof that you've done the work. If you cannot produce evidence in court, unless you're Bill Cosby, nothing happens. Is he still in prison?
As far as I know, yeah.
Yeah, no evidence yet though, but he's still there.
Yeah.
That is a very tragic situation,
Yeah.
unfortunately. They know very well that a man is innocent until proven guilty.
Mm-hmm.
And they have brought no evidence to the court to prove that he did those things that was said. That is a shame. And they're
Yeah.
talking about the guy who the police was holding down who died, yet
Mm-hmm.
they do not talk about that infraction of justice.
And that surprises me, especially at his level, his popularity.
Absolutely. Which means that oftentimes you find out who your real friends are when you're in trouble.
Mm-hmm.
Isn't that interesting? Look at
Yeah.
what happened
Yes.
and watch this very carefully. Bill Cosby did a whole lot for Black Americans and Americans around the country and around the world in terms of his influence. It is no secret that he contributed a whole lot of stuff, money and otherwise, to help charities and so on. Nobody ever said that Bill Cosby was perfect. I don't know anybody who is. That's my point. But we do know
Right.
that he made many positive contributions. Yet they have locked him up without evidence and nobody's saying anything on his behalf.
Mm-hmm.
On
No.
the other hand, we have these persons who are fighting with the police, resisting arrest, wouldn't stop doing stupid, crazy stuff, putting the police in danger and all this kind of stuff. Yet they're breaking up half of America because
Mm-hmm.
of them. But not a single word on behalf of Cosby
Right.
and all that he did and represents.
And it's so many years later, and the
Absolutely,
so-called victims,
that's my whole point.
they
Um,
took from him all their life, and now all of a sudden they call. If somebody raped me, I sure ain't going back to their house or around them or taking
of
nothing
course
from them.
not. Exactly. Not only that, if somebody raped you, you should report it when?
Right there and then.
Yeah, go from right from the scene, unless you go right to the
Exactly.
police, let them do a rape kit, let them let them call him in, do it, whatever, get the evidence, correct?
But these ladies took money from him for school and everything after they claim he did
All
this.
kinds of difference and opportunities, which is not
Yes, and
always
that's all it was, and looking for an opportunity.
absolutely. And yet they come back and make these allegations, and the court, without any evidence, locks up the guy.
Mm-hmm.
And they know you can't lock up a killer without evidence, correct?
Exactly.
How many murderers are walking around free because there's no evidence to convict them?
Lots.
Yes. It's a most unfortunate situation, and it is the greatest example, one of the greatest examples of hypocrisy.
Mm-hmm.
It's one of the reasons why they're having so many difficulties trying to resolve their problems.
Mm-hmm.
Too many contradictions. All right, keep going.
However, as per the decision given in the McKeeson and Robbins case of 1939, the auditor must physically inspect some of the asset, and the auditor has to report on whether the balance sheet shows a true and fair view of the state of affairs of the company. Hence, he is required to verify all the assets and liabilities appearing in the balance sheet. Where he fails to do this, the auditor can be held liable for damages.
Absolutely.
According to the Statement of Auditing Practices, the auditor's objective in regard to assets generally is to satisfy that 1. They exist, 2.
Yes.
They belong to the client, 3. They are in possession of the client or the persons authorized by him, 4. They are not subject to undisclosed encumbrances or lien, 5. They are stated in the balance sheet a proper amount in accordance with sound accounting principles, and 6. They are recorded in the accounts.
Okay, now stick a pin. Let me just say this, especially for Lillian, who's an internal auditor at the moment, and Camille, she's a youngster. She could be anything in the future, including an auditor. So you never
Mhm,
know about this crap. And you don't have to be an auditor to understand and use this information. That's the beauty of it all. You use the information to help you do your normal job as it applies. Okay? So let's say, for example, Lillian, your organization was bold enough to allow you to conduct an audit on your equipment in the company. With all this information, you can take these very same 6 points and use that as your audit plan and program, as simple as they might seem, and go ahead and conduct your audit of the equipment in your firm. Because basically, all you need to do is type this on a sheet of paper with some space to write,
mhm,
walk in to your organization, wherever the offices are, and say, hey, how many computers do we have in this company? And then somebody in the accounts department is gonna say 210. Fine, you write that down. Then your next question is, do they exist? All 210? They're gonna say, yeah. And then you can say, fine. Financial controller said they exist.
mhm,
And you say, fine. Now, do you have a listing with the serial numbers for the 210? See, all of a sudden things start getting a little funny now.
mhm.
And you still on number one. Now you're dead busy and you haven't gotten to two yet. Okay? And now you're getting all kind of different looks and expressions like, do you have a list of all of the computers with the serial numbers next to them? And then for some strange reason, he says, yes, very happily. Here's the list, 210. And then you're still in one, because now you still need to verify that they what? Exist.
Mhm.
So now you have to say to them, I need to check each one of these on this list to where they are in the firm. Oh man.
I can hear them now. You be
Oh, you can
crazy.
hear them now, correct? All of a sudden they tell you, you know what? Why don't we meet after lunch? And while you're after lunch, they're talking to top management like this chick you all sending here from that island. Man, she's making my life miserable. How the hell am I gonna find the 210? I don't even know 100 somewhere. See? All of a sudden, what is supposed to be a straightforward situation now becomes complicated. And you're not past number one yet.
Mhm.
And let's say eventually you get past number one with some this and that. You go to number two. Do all of these computers belong to us? And then they said, yes, why you ask? Because I'm the internal auditor, I'm required to ask. That's the same thing, give you another bit of power you can't, or make people, or whatever people try and get you not to ask. And he said, do they belong to us? He said, yeah. So you said to them, do you have the proof that they belong to us? They proof on a Skylark with proof. Well, you're looking financial controller, didn't you buy them? Uh, yeah, good. Then you should have an invoice with the serial number for each one of these, shouldn't you? I said, mother sick, man, what kind of check this is? Now all of a sudden you just on two, Lillian, and half the company is your enemy now. Just like that. Because now you want to see the invoices for each one of those computers that they bought. If you can find an invoice for each one of them, I'll buy you lunch from Great Cliff, which I cannot afford. But they might surprise you, right?
Mm-hmm.
And find all 210 invoices. Wouldn't that be great?
Yep.
And then you go to 3 and so on. So you can see right away you have your audit plan and program for verification of assets right there in those 6. There's a lot more, but it's right there in those 6. You could be busy for weeks messing with that and for creating all kinds of enemies doing your job. Just those 6 things. And then when you finish like 6 months later and everybody's miserable, fired and tired and pissed with you, then you say, now I need to verify how many. Then you go to another asset. And they say, you know what? I think we need to bring somebody in who we know. Is this Lillian? She's not working out. She's actually doing the job, and we can't have that because she's a great inconvenience. That should not be the case, but many organizations suffer from that problem. Okay, keep going, Lillian.
Points to be considered. While conducting verification, the following points should be considered by the auditor. 1. Existence. The auditor should confirm that all the assets of the company are physically present on the date of balance sheet. 2. Possession. The auditor has to verify that the assets are in the possession of the company on the date of balance sheet. 3. Ownership. The auditor should confirm that the asset is legally owned by the company. 4. Charge or lien. The auditor has to verify whether the asset is subject to any charge or lien. 5. Record. The auditor should confirm that all the assets and liabilities are recorded in the books of account and there is no omission of asset or liability. 6. Audit report. The auditor has to report whether management has conducted physical verification of fixed assets and stock and the difference, if any, between the physical inventory and the inventory as per the books.
Yes.
7. Event after balance sheet date. The auditor should find out whether any event after the date of balance sheet has affected any item of assets and liabilities.
Okay.
Scope of verification. Verification includes obtaining information on the following. 1. That the assets were in existence on the date of the balance
Notice
sheet.
we keep coming
2.
back to it in different ways. And the
Yeah.
reason for that is to double down on the importance of these steps.
2. That the assets are being acquired for the purpose of business only. 3. That the assets has been acquired under proper authority. 4. That the right of ownership of the assets are vested in the organization. 5. That the assets were free from any charge. And 6. That the assets were properly valued and disclosed in the balance sheet.
Okay, stick a pin for a moment. Lillian, welcome, Angela. Can you hear us? Can you hear me?
Yes, I can hear.
Wonderful. How was your day?
It was good.
Doggone it, you made it.
Yeah.
Welcome aboard. We are presently talking about the verification and valuation, mostly verification at the moment of assets and liabilities, primarily assets at the moment. And as you'll see when you get into reading that stuff, that the auditor is required to go into the organization and verify that all assets exists, that the company owns those assets, that there are no charges or liens against those assets by any bank or other lender or person or supplier, and basically that these assets are fully owned and directed by the company. Um, we were just talking about an example of the internal auditor going into verifying, say, well, the number of computers that a company that your company might have, only to find that when it's time to check for invoices for purchases and serial numbers and all that stuff, that things don't add up because the number of computers that are supposed to be there when you do your checks physically, they're not there, serial numbers are incorrect, and all kinds of other problems can come up when you're verifying assets. So if you haven't done any asset verifications for your organization yet, be assured that that exercise is not always on paper. It's pretty straightforward if you're following the procedure, but when it comes to dealing with people, it's a whole different ball game. For example, if you just back up, were you here, Angela, when we started talking about the points to be considered?
No, I just got here.
Okay, so one of the key things as an internal auditor yourself are these points to be considered. I was saying to the other students that just with these points alone, you could walk into your organization and use this as an audit plan and program to find out what's going on with the assets within your firm. And don't be surprised if you come under some heat because your financial controller and other persons in accounting and other persons who are responsible may not be willing or able to answer these questions. But as an auditor, you have the responsibility to ask these questions. For example, if you're going to do a verification of certain assets, what is the most important asset in your organization, Angela, other than cash?
Sorry?
What is the most important asset in your organization other than cash?
Um, I guess the building.
Yeah, the building is probably the most expensive asset. Do you guys own the building
Yes.
and the land, obviously?
Uh-huh.
Okay. Now, the question is, and we were talking about that through a young lady who was talking about verification of fixed assets, land and buildings um, little bit earlier in terms of, yes, these things are shown on the company's balance sheet, but do they actually exist? And have we checked them out as internal and external auditors to make sure everything is in order? And so if land and building is probably your most expensive asset as the internal auditor, the points to be considered for you might be, number one, the existence of the land and building. Okay, so yeah, you say, well, it exists because I'm in it. Okay, fine. But have you ever seen the mortgage documents for the building?
I have a mortgage.
It has a mortgage?
No.
No. So it's free and clear.
Yeah.
Have you seen the title deeds?
Yeah.
Okay. So you have verified the existence of the building that is owned by your organization.
Yeah.
And that based on those documentation that the company has possession because there are no liens against that company.
Right.
Now, if, for example, somebody decides at the board level to take a loan and use that property as collateral, would you be made aware of that?
Yes, I would.
How do you know?
Because I guess because of the position I'm in.
Okay.
If they I would at least know that they would have something would have come in to request those deeds.
How would you know?
Know why?
Like if you're busy auditing something else operationally, how would you know when the board has decided to make that decision and use the property as collateral?
The minutes.
So would you find it out before or after it's done?
I'll find it out like when the minutes are finished. But
Okay.
those don't happen quickly, so you would know.
Interesting. Which means that in your organization, it's possible for you to see the minutes shortly after the meetings are done.
Yeah, once the minutes are ratified, I can request them.
Aha, which is one of the beauties of working in an organization like yours, because many other organizations you don't see minutes for a year later or years unless you request them.
Yeah, no, no.
That's the beauty. And sometimes when you request them, they don't give it. You're like, why the hell she wants it? This is a board decision. And then you say, well, I'm internal audit. And they say, we don't care. We appointed you.
Mhm,
And we could disappoint you as well.
mhm. They could,
Yes. So absolutely.
but I'm
But
going to write my report.
absolutely. And they're very fortunate to have such an auditor, because a lot of auditors are not doing their jobs and not seeing it the way you do. And that's the position you have to take when you're in this business. Other than that, then you are going to be regarded as the other type of auditor. Some people don't mind that title, but some of us, we have a lot of pride in our work. We don't want that title, the other type of auditor. Right? All those who try to be the other type of auditor, many of them have found themselves wanting, be from either out of job, in prison, or reputations ruined. Okay? So yeah, so then you're well aware of the importance of this verification process and how it can apply to all aspects of the firms, in this case, the asset side, and indeed the verification of the liability side as well, in terms of does the union have any loans? If they have loans with whom, what are the conditions of those loans? When those loans, these are all important parts of the audit process to see whether or not the company is operating properly. All right. The other thing that is required by the auditor, internal and external, is making sure that the assets are properly recorded in the financial statements. Yes, if they're on the balance sheet, we assume it's in the financial statements, and we should verify that. So if you look at your financial statement for last year and you see building 1.5 million, you should be able to go to your general ledger, pull up the building account, and see 1.5 million. Don't be surprised if you see another number, but you shouldn't see another number. And if you do see another number, you should need to find out why there's another number. Okay. So again, these are all parts and parcel of the. We saw last week the vouching side of things. Verification is a kind of vouching. It's just that it goes further and deeper into the details of a transaction, as opposed to vouching, which is really testing for accuracy and completeness. Okay, very important. And as you said earlier, uh, there is the audit report. If you do this stuff and you run into trouble and do that stuff, there is your report. And your report is obviously your weapon for informing those who need to know. Okay? And then I think you walked in on the scope of the verification when Lillian was talking about all the different extensions of the verification process. And so now we can move on. Okay, so now that we have Angela, Lillian, you can take a break.
Okay.
We'll leave Angela for last but not least. All right, Camille, why don't you pick up the objectives of the verification process?
Okay. Objectives of the verification. Following are the objectives of verification of assets and liabilities. To show the correct valuation of assets and liabilities. To know whether the balance sheet exhibits a true and fair view of the state of affairs of the business. To find out the ownership and title of the assets. To find out whether assets were in existence. To detect fraud and error, if any. To find out whether there is adequate internal control regarding acquisition, utilization, and disposal of assets.
Just to come in, Camille, for one moment on number 6. Those 3 words, let's just say something about those really quickly in terms of the auditor's work to find out whether there's sufficient control concerning acquisition, utilization, and disposal. Those are fundamental to any firm in terms of internal audit or even external audit, making sure that any assets that are purchased by the company, that we go through the verification process and make sure it's done correctly from start to finish. That is absolutely crucial, especially assets with high value valuations attached to them. Making sure that assets are used for the intended purposes. Sometimes we take it for granted that we purchase computers for expert purpose, and then we discover if we do our checks that it's really not being used for that purpose, and in fact it may not even be in the organization at all. It might be somewhere else, God forbid. And then of course we were talking about the disposal of assets earlier, where many companies assets disappear and the accounting department never knows. Person's responsible for assets, especially if there are many, like 1,500 cars. It's hard to keep track of all of them if you're not checking. So some cars might be sold and the money pocketed. Some cars might be converted to the individual's personal name, and God forbid, all kinds of stuff like this. So the disposal process could easily be violated, and information not ever getting back to the accounts department unless the audit department or the external auditors conduct an extensive verification and eventually discover that these things are being, or maybe somebody blows the whistle. How's that? So my neighbor, I see them spray in the car. I know that's one of you in the car, and that's why I come to tell y'all don't give me any money for talking like that. A whistleblower. Okay. Should If somebody blows the whistle like that on BPL, should they give the person money? Anyone?
No.
I know that's not a practice that we consider in the Bahamas, is it?
No.
No.
I'll say this: in financial services, if somebody who works for a bank, for example, tells the government that their company is or involved in money laundering or any such activity, and they found it to be true, those whistleblowers are actually rewarded. They're given a certain percentage of the money that's recovered by the government of that particular country.
Well, currently we don't have any whistleblower legislation in force, so that wouldn't help
No,
anybody right now.
not at all. Um, Even where they have whistleblowing legislation, people still are reluctant.
Yeah.
But then the real hardcore whistleblowers are those who will blow the whistle whether or not there's legislation because they're just pissed off. They can't take it anymore.
Mm-hmm.
Okay? And so they'll say, I don't care. These injustices have got to stop. Shoot me, but I'm talking. And so you always have the martyrs. And then you have those of us who are waiting for legislation so that we could be protected. And like any other law, depending on the nature of the whistleblowing, even with legislation, they'll still send a hitman out to take you out anyway, in one form or another. So you have to really be bold, a law or not, to blow the whistle on these guys, especially when millions of dollars are involved and people's fragile reputations and all this kind of stuff. Okay? It's a very tricky situation. All right, keep going.
To, to verify the arithmetic accuracy of the accounts, to ensure that the assets have been recorded properly.
Okay.
Advantages of verification. It avoids manipulation of accounts. It guards against improper use of assets. It ensures proper recording and valuation of assets. It exhibits a true and fair view of the state of affairs of the company.
Absolutely.
Verification techniques. Inspection. Physical inspection of the assets. Example, company cash in the cash box, physical inventory, inspection of share certificates, documents, etc.
Mm-hmm.
Observation. The auditor may observe or witness the inspection of assets done by others.
Mm-hmm.
Confirmation. Obtaining written evidence from outside parties regarding the existence of assets.
Okay, so clearly, once you understand the whole process of verification, then you know that your three tools and keys to the process has to do with three things. You inspect, you observe, and you confirm. And you do whatever is necessary to get those three things done. You may do one, the other, or all of the above. Sometimes, all the time. It's up to you and the organization you work for. at the end of the day, these techniques are designed to help you to do your work more efficiently and more effectively. All right, keep going.
Verification of assets. The term verification signifies physical examination of certain classes of assets and confirmation regarding certain transactions. Sometimes verification is confused with vouching, but they differ from each other on the nature and depth of the examination involved. Vouching proves the arithmetical accuracy and the genuineness of the transaction, whereas verification inquires into the value, ownership, existence, and possession of assets, and also to confirm whether they are free from any mortgage or charge. The presence of any entry regarding the acquisition of assets does not prove that the particular asset actually exists on the balance sheet date. Rather, it purports to prove that the asset ought to exist. However, verification through physical examination and confirmation proves whether a particular asset actually exists without having any charge on the date of the balance sheet. Verification of assets involve the following steps: inquiry into the value placed on assets, examination of the ownership and title deeds of assets, physical inspection of the tangible assets, and confirmation regarding the charge on assets. Ensuring that the assets are disclosed, classified, and presented in accordance with recognized accounting policies and legal requirements. The scope of verification is wide, and consequently, verification is an important part of the auditor's duties. An auditor should endeavor to satisfy himself as to whether a particular asset is shown in the balance sheet at the proper value, whether the concern holds the title to the asset and the asset is in the sole possession of the concern, and lastly, whether the asset is free from any charge.
Before you let me just say, concern means the entity or the company or the firm that you work for. Okay. The other thing is, when we're looking at verification, we have to always be thinking on the other side of verification is valuation. A lot of times auditors get busy with verification and not valuation, or they get busy with valuation and not so much with verification. Both of them are required to be checked to make sure not only that they exist, they're in the possession of the company, and there are no charges and liens, but also that the amounts that are indicated are reasonable and fair amounts for the asset in question. Now, oftentimes that requires a lot of experience, judgment, and referrals. But again, all of these things become easier to deal with based on your experience and your good judgment and your ability to consult others if necessary to get the information that you need to do the job that you're doing in terms of your auditing. Okay? That's the important thing. You're never going to know everything about everything. You're not required to know, but as long right away. But as long as you uh, are diligent and using your judgment and your best experience and referring and talking to persons who can help you, then the process becomes easier and easier over time. And of course, the more familiar you are with the firm or company you work for, or you're auditing externally, the easier your work will be. Okay, keep going.
Oh, where is that?
Right in the middle. If the auditor,
If the auditor fails.
Oh, if the auditor fails to perform his duty, he will be held liable. In the case of London Oil Storage Co. Limited versus Sir Hasluck and Co. 1904, Chief Justice Alverstone remarked, "It is the duty of the auditor to verify the existence of the assets stated in the balance sheet, and he will be liable for any damage suffered by the client if he fails in his duty."
my.
Besides the legal importance, verification also plays an important role to guard against improper valuation of assets like stock in trade, which may inflate or deflate the profit position of the concern. Improper valuation of assets may also conceal the actual position of the business as reflected in the balance sheet.
And I'll tell you, many companies around the world are using incorrect balances on their balance sheet. Remember window dressing? That was one of your exam questions. Window dressing is much more popular than you think. Maybe at your level in the organization or the size of the organization you work for, you may not be aware of it, you may not see it, you may not even know it if you see it. But window dressing is very, very popular around the world, and many top management people are often engaged in that hideous practice in order to make themselves and their organizations look like they're doing better than they actually are. Or sometimes they might do it so that they could look worse than they actually are because they have ulterior motives, which can only be known at the executive management level and or the board level. Okay, keep going.
However, it is not possible on the part of the auditor to physically verify each and every asset because time may not permit him to do so, or he may not have sufficient technical knowledge of the assets concerned. It was decided in the case of Kingston Cotton Mills that it is not a part of the auditor's duty to take stock. No one contends that it is. He must rely on other people for the details of the stock trade. Again, while going through the decision of the McKesson and Robbins case in 1939, we found that the auditor should physically verify some of the assets. If possible, title documents like negotiable instruments, shares, debentures, securities, etc., are to be thoroughly examined on the last day of the accounting period. He should satisfy himself that the transactions, if any, on the balance sheet date and the date of audit are bona fide or bona fide
Mhm.
and are supported with proper evidence. The auditor is also supposed to verify stock and trade with reference to the purchase book, the stock records, the gatekeeper's book, etc., though the law does not specially,
Especially.
especially compel him to take stock and trade.
Thank you very much. Okay, so there you go. In essence, we're reminded again, whatever you are looking at in your firm, you have to look at it from start to finish to make sure that all the required steps are taken from acquisition to disposal of the assets, whatever they might be. Again, depending on where you work, some of these areas may not be highlighted or even discussed. It's something that takes place somewhere in the quiet of somebody's area, department, office, whatever the case might be. And that's why it is often said that the more vigorous the internal audit function is, uh, the more likely important things would come to light that can be corrected before external auditors come in or before something happens within the firm to get it in trouble or to put it in an embarrassing position. And ideally, that was the primary reason of the internal audit department, to hope that they can pick up things along the way and ensure that things are being conducted properly before something happens to the contrary. That is why it is so important for management to emphasize. By the way, for you guys who are in internal audit or even just working for the firm, in terms of staff meetings, are there any discussions about the internal audit function?
In the
Staff
staff meeting.
meetings?
Yeah, like when you guys have staff meetings or department meetings, or when the Malcolm Marks decide they'll come down off their thrones to talk to you
Boy,
alone.
we haven't had a staff meeting for all staff for many a year.
Wow.
I can't remember the last. I mean, we have departmental meetings, but staff meetings for the whole staff, we haven't had one of them in, gee, I would say more than 5 years for sure.
Wow. What about your side, Angela? Do you guys have like staff meetings, everybody, general staff meeting?
We have general staff meetings, typically after, like if something has occurred, like if there's a new hire,
Right.
or if after AGM,
Okay.
or something like that. But we've had at least one, well, we've had but two so far for the year.
Oh,
Okay.
wow.
With everybody.
Yeah, and we have supervisors meeting.
That's fantastic.
We usually have them every week.
That's
We
fantastic.
haven't had one, I think, so far for the month.
That's
But
not bad. That's pretty
Good,
good.
yes.
The problem too is, apart from organizations that do not do that as a practice for one reason or another, the bigger the organization, the more likely you're not to have a general staff meeting. However, I'm thinking now, Lillian, with Zoom, they could talk to everybody, couldn't they
Yeah,
now?
they should. I mean,
And
we've been asking them to have them for a while.
yeah,
I mean, we have meetings from time to time with the heads of the departments or like certain people out the department and stuff,
abs-
but we haven't had a full staff meeting in way over five
absolutely.
years.
And in fact, with Zoom or some such facility, you guys can actually include people who you're affiliated with internationally as well, who might have some influence over the company. So everybody can get together and chit chat,
Yeah.
you know? And so this would be a perfect time where, under normal conditions, somebody is somewhere in the world, people in different locations, different islands, and all this stuff, man, that's not going to work. Where the heck we must be going to meet to the sports center or whatever. But the point is, with these virtual facilities, now you can have a general staff meeting and anytime, when people don't have to move from wherever they
Yeah.
are. But even with that, top management people still seem to be reluctant in some organizations to do that. Like they don't really want to be confronted by their people. That is nothing.
I think that's what it is.
yep,
If I put my head in the sand, then it's not there. It's not uncommon. What is amazing is it's found its way into the 21st century still. Okay, for sure. The other question is, whenever there is a meeting, is there ever any discussion about the internal audit process or internal auditors?
no,
Not
No,
really.
not
no.
really.
Yeah, because nobody really wants to have that discussion either.
Maybe in accounts when it's coming down time for, if the internal audit has been in there for something, maybe, but not on a normal basis.
Not on a normal basis. Indeed. Which is unfortunate because that would be an opportunity for a head of internal audit and her people to talk to staff and say, guys, if you would consider these things, it will make our job easier as internal auditors, and it will make your life easier when you're being audited. You follow?
Yes.
But for some reason, folks don't have that conversation. And they wouldn't invite someone in either. They wouldn't invite the head of internal audit because sometimes, okay, we don't want anybody from the inside because we hate that person and we're not listening or whatever the reason. But they wouldn't invite somebody from the outside either who's independent
Mm,
to to sit in with staff and say blah blah blah. Uh,
yeah.
you might be surprised to find that it makes the internal auditor's job easier. The
It
more
will
people,
because the more people that know what's expected of them and know what the internal audit is all about, you wouldn't have that pull and haul that you have normally because they know what to expect.
absolutely. It's fascinating that with all those benefits, that folks are still, God forbid, avoiding the issue. My. So every time the auditors come in, it's the same old fight because people are ignorant, unaware, and downright frustrated because they don't understand all the things that's going on. Okay, and so oftentimes you guys are seen as the enemy rather than the friend of the company. Unfortunate. Okay, Angela, last but not least, valuation of assets.
Valuation of assets. Valuation of assets means determining the fair value of the assets shown in the balance sheet on the basis of generally accepted accounting principles. The valuation of assets is very important because overstatement or understatement of the value of assets in the balance sheet not only distorts the true and fair view of the financial position, but also results in distorted profitability.
Mhm.
The valuation of assets is the primary duty of the management of the company. The auditor is required to verify whether the value ascertained is a fair one or not. For this, he may rely on the technical certificate issued by the experts in the field. Valuation of assets means not only checking the value of the assets owned by an organization on the balance sheet date, but also a critical examination of the value of those assets by conducting a comparative analysis of different assets.
Mhm.
The auditor also has to ensure that the principle of valuation of assets is consistently adopted and is based on established principles of accountancy. For the purpose of convenience, these assets are classified as follows to determine their value.
Mhm.
Fixed assets,
Mhm.
current assets or floating assets, wasting assets, intangible assets, fictitious assets. Fixed assets are usually valued at going concern value, which means cost less depreciation. Cost here means the purchase price of the assets plus all incidental manufacturing, buying, and installation expenses incurred to bring the assets into use. Depreciation is the provision made for the reduction in the value of the assets on account of their usage, natural wear and tear, and obsolescence. The depreciation provided should be fair. Otherwise, the value of fixed assets may not be fair. What is a fixed asset? What is a fixed asset depends on the nature of the business organization.
Take a pin 1 second, Angela. Before you came, we were looking at a video with Sandidra from India. That's not a real name. I made that up. She's an Indian person who's presenting on verification evaluation. And the others might remember she spent a lot of time talking about fixed assets and what constitutes a fixed asset, how to capitalize any other expenditure to get the assets up and running, and also the issue of depreciation. Now, most of you, if not all of you, might or should know what depreciation is. When you buy a car, you know every year the car what depreciates.
Mhm.
In accounting, we have a special way of doing depreciation, all kinds of different techniques. But basically, for example, one of the techniques involves taking the cost of the vehicle. Let's say the vehicle costs $10,000, including all costs. And we say that the vehicle is going to run for 5 years. It might run for 50 years after that, but accounting can go 50 years. We have to establish a reasonable working time. That is why it is so important to use good judgment or professional help when it's time to do these things. So we get a professional who says this bloody car will only run pretty well for the next 5 years. So we say the life of this car for accounting purposes is 5 years. If that is the case, who can tell me what depreciation will be every year?
The method or the amount?
The amount using straight line.
And the cost was how much?
10,000.
5,000? No. 2,000.
2,000, yes, very good. Okay. And of course, straight line is the most popular depreciation methods for certain fixed assets, particularly with vehicles and equipment and so on. And so every year, the vehicle would depreciate by $2,000. So after the third year, we would say that the depreciation on the vehicle is $6,000 and that the book value or selling price of the vehicle is $2,000, which is 10 minus 6 equals. And so she spent a lot of time talking about these kinds of things. It's important that when the auditor goes in to check these things, that all of these things are because remember, financial controllers and CFOs and stuff can manipulate numbers to satisfy what they want. And so even depreciation can be manipulated to show more or less profitability depending on the agenda of top management, along with the CFO, who runs the accounting and finance department. Right? So it's important that you have a certain amount of skills to be able to do these assessments. And remember, you don't need all the skills. If you don't know, consult somebody who does know. And they will advise you, and then you can go ahead and file your report. All right. So, for example, um, Lillian or Angela might be doing a review of fixed assets and they're looking at certain depreciation methods that they want to check, but they don't want to go to the accounts department to say, hey, what are you guys doing to arrive at this? Because they might be in collusion with God knows whom. Not necessarily, just making a case. So now they remember, wait a minute, we just did a class with Mr. Wilkins and he sounded like he knows something about in accounting. Let me call him to get some professional feedback. And so I'll say, and then you go ahead and do your report. See my point? So you don't really need to know everything. You just need to know who knows.
Yeah.
And then you get the information that you need to get. Okay? All right, keep going.
Current assets or floating assets are usually converted into cash at the earliest opportunity in the process of business activity. For example, stocks, bills, receivables, and sundry debtors. Based on the conservatism principle, current assets are usually valued at original value, cost price, or market value, realizable value, whichever is lower. Because they are intended to be converted into cash at the earliest possible time, the value we realize is important. This method is adopted to strengthen the financial position of a concern by indirectly providing for expected loss by way of a fall in the market value of the asset. This principle is held by the conservatism convention of accounting, which means we do not expect profits but provide for anticipated losses.
Mhm.
Wasting assets are those assets which lose their value gradually upon their use. For example, a mine, a quarry, etc. To value these assets, firstly, we should determine the usefulness of the assets in terms of units of production, etc. And based on their actual use, the value is to be reduced on a proportionate basis. If in a particular period this type of asset is not used, then the value may not diminish. Thus, these assets are to be reduced on the basis of consumption. When it is difficult to adopt this method, then the cost less depreciation principle may have to be applied.
Again, in the Bahamas, we don't have a whole lot of what we call wasting assets, but the
Yeah.
information is necessary so that you have a broad overview of the kind of work auditors are engaged in terms of getting the bloody job done. Okay.
Intangible assets. Usually, intangible assets like goodwill, patent rights, intellectual property, etc., are valued on a cost basis. But if the same are acquired by a non-cash transaction, then the fair market value is to be taken as the value of intangible assets. The auditor should also review the period of time until it is fully written off and ensure they are shown as assets because they do not have any realizable value. They are to be valued at actual cost less amount written off as depreciation as at the balance sheet date.
Mhm.
Fictitious assets. Certain lump sum expenses which provide benefit for more than 1 year when incurred are written off over a period of time. Usually it is fully written off. It is shown as an asset in the balance sheet. For example, preliminary expenses, discount on issue of shares, etc. These are all fictitious assets because they do not have any realizable value. They are to be valued at actual cost, less amount written off, as at the balance sheet date. Valuation methods. The following are the various principles for the valuation of assets. Cost price, going concern value. Under this method, the actual cost of assets are reduced by the depreciation provided. Usually, this method is used to value fixed assets.
As we just discussed, yes.
Market value. This refers to the market value of the asset, that is, the price at which the asset is being transacted in the market. This is used to value current assets only when this is lower than the cost of the asset. Usually, market value is adopted to value items that are perishable in nature.
Okay.
Scrap value. Assets which are useless for the enterprise may be sold as scrap in the market. The value for which such assets can be disposed of as scrap is referred to as scrap value of assets.
Why is this important, anyone? If it's scrap, why are we having the discussion? If it's scrap, ignore it, let it go, let people do whatever they want. Why are we discussing it? Why is an auditor concerned about scrap?
Because this is a way that you can have fraud happen. If
Absolutely, absolutely. Because it's scrap for accounting purposes doesn't mean that when you sell it, the money shouldn't go where? Into the company's bank account, correct?
company, yes,
Not somebody else. And mind is scrap. Let me sell and keep the money. Nobody, it's still the company's money because it's the company's scrap. We only call it scrap because they're not using it anymore. But once it's sold, the money is the company's money. And the details of the sale have to be reported to the accounting department so that the necessary entries can be made in the accounting records for that particular asset, which has been sitting there from the asset was purchased maybe 3, 5, or 10 years before or longer. Do you follow, folks?
yeah.
So the word scrap is not designed for you to say you have carte blanche to do anything you want. Auditors are very interested in how scrap is managed because scrap stuff are easily available for, as she said, fraud. Okay, by all means. Okay, keep going.
Replacement value. This represents the value at which the existing assets can be replaced. That means the price to be paid to acquire such assets in the market on the date of the balance sheet. Realizable value. The value that can be obtained if the asset is sold in the market. That is, anticipated selling price. Usually expenses such as commissions, brokerage, etc. are deducted from it. Auditor's position regarding valuation of assets. So far as the valuation aspect of the audit is conceded,
Sorry, that
the
should be
auditors
concerned.
should be concerned.
Yes.
Okay. So far as the valuation aspect of the audit is concerned, the auditor's position is somewhat different from the other aspects of the audit. It has already been pointed out that the auditor is not supposed to have technical knowledge regarding the valuation of assets. Therefore, he has to depend upon the valuation made by the directors, experts, surveyors, etc. to a great extent. But does it relieve him from liability if certain assets are overvalued or undervalued by the directors, experts, or surveyors? The answer is no, because the auditor cannot provide a guarantee for absolute correctness when he has to depend upon others. And where assets are valued according to the estimated depreciation, he can still be held liable. He has to ensure that management seeks to show the fairest possible estimates regarding the valuation of assets. Under these circumstances, the auditor should see that assets are valued according to certain accepted principles of accountancy. He should check the estimation to determine if it is reasonable. The auditor should thoroughly examine the available papers and documents to arrive at the correct value of assets. Where there is suspicion regarding the valuation of assets, he should investigate further. Distinction between verification and valuation. Meaning, verification establishes existence, ownership, and acquisition of assets, whereas valuation certifies correctness of the value of assets and liabilities. Time. Verification is done at the end of the year, whereas valuation is done during the year. Personnel. Verification is done by the auditor, whereas valuation is done by the management. Evidence. The title deeds, receipts of payments constitute documentary evidence for verification, whereas certification by management is the documentary evidence for valuation.
Thank you very much, Angela. So there we have it, the auditor's job in a nutshell with regards to verification and valuation, like vouching, internal controls, and all of the other amazing techniques for determining errors and frauds. This is just another absolutely important and critical function for any auditor whatsoever. The distinction between verification and evaluation is a very important distinction in terms of meaning, time, personnel, and evidence. And every auditor should be not necessarily walking around with it in your head, but kind of using it as a guiding light with all the other crisp guidelines that are available to help you get your job done. And I've included some certain things in case you haven't noticed. as a point of reference so that when you're in the field, if you want to go back and say, wait a minute, did we have this discussion? Didn't we talk about certain things that we should look for? So you go back in your notes and you kind of pull them out and refer to them and go ahead and make some more enemies or friends, depending on who you're dealing with. All right, so having said that, Angela, let me just say that before you joined us, we were listening to Miss Ma'am. We didn't finish. I stopped about 2/3 of the way because I wanted to leave the rest of her rambling for afterwards. Um, because I think she has a few more things to say to support our little lecture and discussion this afternoon. So we're going to listen to her in a moment. Before I go to her, I was saying about the examination results. Please take the next few days to go over, when you get a moment, to go over your paper. If you see a little question mark, I don't put X's for what I think is an incorrect answer. I just put a question mark. If it's correct, I put a tick. And then on the left-hand side, you see some numbers. Those are the amount of points that I've given for a particular question. On Thursday, before we begin our lecture class, I'm going to go through the test and tell you what answers I was looking for, to see if you agree with those answers or not. If you have some answers that you didn't get credit for, or you feel you didn't get credit for, please make sure you make a note of them so that if you are entitled to credit, I have points to give to whoever needs them or is entitled to them. So do go through them, go through the paper and have a look, and then we'll sort that out on Thursday if you feel that there are a couple of things that you should have been given credit for. Don't be afraid to go to your notes or your reference points to support your answers, and make it a red point. Like, wait a minute, I checked this in my notes. I saw that specifically. How come there's a question mark? So that if you're entitled to credit, you can say to me at the time, check page 7, subsection thing, subsection thingum, and the answer is right there. And so I'm quite happy. I'm quite happy to do that. I'm still marking those doggone. They're taking longer than I anticipated. The case studies, because you guys had written some interesting stuff, and I was trying to make sure I didn't miss anything. But I'll get those to you same way, by scan with your results in another day or so, along with your second case study. The second case study is going to be a 2-part case study, not 2 parts to make you miserable, but 2 parts with specific objectives in terms of your responses. And I think if you don't find them exciting, you'll at least find them interesting, hopefully. And they'll be helpful to you in your day-to-day work and the things that you have to see out there in the field. So I'll get those to you tomorrow as well. They're just some questions that I'm creating, that are proprietary, my own questions that I'd like to create out of the case before I send them to you. Any questions on anything else at this point? Okay, wonderful. Let's take a few minutes then and listen to Ms. Mam complete her little discussion on verification and valuation to see if there's anything else we can gather from her. Can you guys see that?
Not yet.
Not yet.
Okay. I can only see Camille at the moment. Where did everybody else go?
I can
Okay,
hear
I see
you.
Lillian.
I'm here.
I see Camille. I had you guys on. Hmm. Not sure what happened to my video connection. Can you guys still see me?
Yes.
Yes.
Doggone it, where did you go? I can't see anybody. Hmm. I'm sorry, just trying to get this. I'm not sure what happened. Okay, I'm not sure what happened to you guys. I can't see anybody except Camille for some reason. Camille, what did you do to my system?
Oh, I didn't do anything.
I didn't think so, because you're the only one I can see. How come I can't see anybody else?
I don't know.
That's weird. Okay, you know what we're gonna do? I think that's a sign that it's time to break after a long bloody evening. We'll pick up with the madam at the beginning or somewhere along the way next week. Sorry, on Thursday, and let her finish up her little discourse on verification and evaluation, and then we'll go forward from there. If there are no other questions, then we'll break for the afternoon, and I'll see you guys on Thursday.
Okay.
Okay.
Okay. Night.
Good
Yeah.
night.